Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, January 24th. Excuse me, I'm trying to get my days straightened out here. It's kind of a rainy day here in Southern California, so I guess I'm a little distracted here. We do got a few economic news releases scheduled here. We do got the weekly jobless claims. We had 335,000, which was pretty low last week, which the investors really liked that last week because we were typically getting this forecast number in the 360 range. And this week it actually came in at 330, so even less. These are about 5-year improvements. So we haven't seen these numbers in approximately about 5 years. So these are great news. Fewer people are applying for unemployment, so that's decreasing. So it's going to make you wonder for when the job numbers come out next reading to see if that unemployment rate comes down at all, if people are actually finding work and such. The next item is the market flash PMI. This is a purchasing merchandising index. So this is an important index for us to gauge as to where the economy is moving. And we had a 54, so anything above 50 is an expansion. So we've been showing a little bit of expansion. They thought it would come down a little bit, but they actually went up a little bit to 56.1. So good numbers right there at 56.1. And then the other item here is a leading indicators for the month of December. So we had a 0. So basically we were at stagnant when it came to November. We figured it'd come up a little bit to 0.4 and exceeded. So great numbers we're seeing today at economic news for the economic news releases. So we'll see how the stock market's reacting to it. So right now it's a little bit of mix. Dow's up quite a bit. It's about 90 so far this morning. The S&P I believe is up right now currently as well. The Nasdaq I believe is, if I remember correctly, getting the two mixed up. It's being weighted down. So basically, who's weighing the Nasdaq and the S&P because they both carry Apple. Apple is, which brings us to the next one here, is they had disappointing expectations. So they had good sales, but they're expected to exceed those. So they're kind of, we may be seeing the growth factor of Apple maybe kind of reaching its peak already, as they're kind of blaming the iPhones, maybe the lack of demand for the iPhones. Some people, investors, are saying maybe the iPads maybe throwing a wrench in there. I myself have a couple iPads and was kind of disappointed last year in the respect that they had iPad 3 come out earlier in the year and then come out with 8 months later come out with iPad 4, and then in January they announced iPad 5, so 5 months after the iPad 4. You know, I think their product placement is kind of ridiculous. And then on top of it, you got the mini iPad coming in, which is probably taking sales from the regular iPads. So you got a lot of factors in there that probably affecting Apple, and they probably need to get some of that stuff straightened out. That's a personal point of view. But those are Apple's what's kind of weighted because they are kind of heavily weighted on the Nasdaq and S&P. All right, so let's go ahead and see how the interest rates are being affected today. So here's the bond market. This is the mortgage-backed securities. We did go up a little bit, but remember we had this closing opening gap, and today we closed it, so we're actually declined. Right now we're currently at 27 basis points from where we are so far this morning, but we started lower than where we left off. So that actually brings us to about 32 basis points difference, which is resulting in negative pricing today. So we do need to be cautious here. Don't know if we'll be reaching the highs we've had or the improvements we've had before, because maybe tomorrow I'll show on a chart here. But if you look at like these charts over longer term, it's actually got a downward trend, which means interest rates are steadily climbing upwards. Basically, we will come down, and then our new highs aren't as high as the old highs, and then we'll go down, and then again. So it's bringing us into a downward trend, which is resulting slightly higher rates over time here. So don't know if we'll definitely get back to those rates or not, especially with these positive economic signs being released. But unless something comes out dramatically that reverses it, we may see a trend here where the interest rates might kind of continue going upwards. So be cautious out there. All right, folks, you guys have a wonderful day. Thanks for stopping by. Thanks for watching. We will see you guys tomorrow. And if you guys like to receive these videos on a daily basis, just stop by mikesdailymarketreport.com. In the upper right-hand corner, you'll find that there's a subscription. And again, we don't share this information with anybody. We don't even send you any other emails. Just when I upload these, we'll automatically send out a video update to you. All right, have a wonderful day.